Let's shift attention to the commodity space. Manisha is here with what she's tracking today. Manisha, morning.
Morning, Prashant. I'm looking at copper because this is a commodity, and a Dr. Copper, as it's known, has been sold in the last 3 or 4 sessions. But we've seen some bargain buying happen on the lower side. This also is happening as the futures markets are higher ahead of the expiry, which is due today. Well, there also is funds short covering because we have been looking at very short positions being created by investment managers and funds in many of these metals, including copper. So there is some short covering as well happening there. All of this is happening ahead of the China PMI data. That is one thing that is awaited. And the other is the China National People Congress meeting. That's happening in this week as well. And the expectation that you could be looking at a long-term vision coming in for the property sector. You could also be looking at some stimulus measures coming in, some more pledges in sense of supporting the property sector, etc. And that is where the metal is taking some sense from. Also, when you look at the China copper ore and concentrate imports, that has gone up by nearly 20% versus the first quarter of 2021. This is before the property sector started to see a decline. Also, when you look at the inventories in Shanghai itself, that has gained up by 500% year to date right now. Of course, the inventories were on the lower side in the previous year. We were trading in a deficit when it came to copper for the last 3 years. So this is support coming in from very lower levels in sense of those numbers there. But there have been also very interesting statements coming in from the global banks and brokerages. To begin with, Goldman Sachs says that the largest immediate price boost in commodities would come in copper when the US rate cuts actually happen. They've actually put a number out at 6% of an immediate reaction on the higher side, as in when you start seeing those rate cuts come in. There also is a report from International Copper Study Group which says that the world mine production will increase by 3.7% in this year, but they expect the consumption to be much on the higher side. ANZ also came out with a report on copper saying that the demand growth in 2024 from US, China and India is anticipated 4.3% year-on-year for the year 2024. ANZ also puts the copper price estimates at around $9,000 this year and $10,000 in next 12 months. Currently, the copper prices are trading at an $8,400 per ton. There also is a report from Citi which says that the copper prices could reach $8,800 in the coming 3 months itself. So bullish cues coming in from the banks and brokerages as well. I quickly want to touch upon the copper smelter charges where we have seen those decline to decade lows. That is because the concentrate is easily available. There is more production. The contango seems to be getting deeper. So that tells you that immediate availability in sense of copper is on the higher side there. When you look at the spot treatment charges, they are at $19. It is 9% lower than previous year at $80 a ton. And we also are looking at these numbers at much lower than a 6-year highs that we saw in 2023 as well. So immediate availability is there. But going forward in the second half, the expectation is that the copper demand is going to be much on the higher side.
All right, Manisha, thanks very much for that.